Hello, fellow traders. 'Tis I, the Rumpled One. It is Thursday, May the 6th. The year's 2021. Let's talk trading. Purity Part 4 with Walmal. And just like Parts 1, 2, and 3, Part 4 is for educational purposes only. Your results may differ from mine and from Walmal's. Walmal, seems like we keep running out of time talking about purity. I wonder, are we getting off track here? Because shouldn't purity be real simple?
It should be. You would think it would be real simple. I mean, the whole idea of simple life, yeah, it should be. It should be. But at the same time, you got to remember that in trading, everything in trading is very very simple. It really truly is. That doesn't mean it's easy. It just means it's simple. It's simple to push the button. It's simple, to get into a trade. It's simple to get out of the trade. But the thing is, making money, well, that can sometimes be a little difficult and hard and take some work at it. So, but the whole idea of purity, what it'll do for us is that once we've figured out how we can make money, is actually taking it to the next step and actually implementing it. And I've reflected back yesterday a little bit about my own trading journey, and when I look back at my trading journey, it was like I spent a lot of time, a lot of years putting it together, trying to figure out what works, what doesn't work, and then realizing that what necessarily works for me may not work for someone else, and what works for someone else may not work for me. And that's part of the purity as well. It's just going and making sure that I'm doing what I'm supposed to be doing, and keeping it simple and not overcomplicating it. And I know you like to use the expression, you're being too cute. Well, yeah, you can go and do that. You can become so cute that you've now taken purity and made it extremely complex. And that's why I wanted to finish yesterday when we were on the video.
Yeah, and it's funny because last night I got something on a YouTube video and I was listening to this ad and this guy talked about, statistical trading and rule-based trading, mechanical trading. So it caught my interest and he said, and at the end of the video, by the end of the video, I'm going to give you these rules. Well, after 2 hours of listening to all the marketing hype and mumbo jumbo, I got the link, and it's funny. He says he's the only one that nobody else is talking about statistics. It's like, well, obviously he never heard of me, but um, and I'm sure I'm not the only other one out there doing statistics. In fact, I know there's a trading group over on FOREX Factory that they pretty much run statistics. Um, but the point is, it's that you know when people all like to ask me, well, what method do you trade? I go horizontal line. So I'm looking at the chart right now. We're coming up to the double O. We're 10 minutes before the end of the hour. You take the trade long. There's nothing to think about. Nothing. It's simple. And right now I'd be down, almost a pip or two if I had gone long, because I'm looking at the H1. I'll flip over to M1 just so we can see it. So you can see here, it popped up and through, but you take your chances. Okay, look at that. I'd be down what? 2, now I'm only down 1. And now right there, it's going to profit. So, but that's just it. Do I know if this trade's going to be a winner? No. Do I know if it's going to be a loser? No. All I can control in this case is, what am I willing to risk? Am I willing to risk 5 pips, 10 pips? That's it. And and the keeping it simple, taking this trade, maybe I'm only looking to get 2 pips, and I take it. And if I have $1,000 account and I get 2 pips, that's $20. If I net 2 pips, $20, that's a 2% return on my money in one trade. So somebody might say, trading $10 a pip with $1,000 account, that's kind of risky. You could blow your account. That's true. But let's say if I have a 5 pip risk, that's $50. Am I going to lose 20 times in a row? Am I that unlucky? Maybe, maybe not. I don't know. But if I hit it, I don't care.
And the thing is, I want to go and add something to that, what you said, because it's absolutely true. Most people that I've talked to that have blown accounts up, when they've blown accounts up, it's not because they lost 20 trades in a row, which can happen. There's no question about it. It absolutely could happen. But that's usually not how they blow accounts up. What blows their accounts up is, basically a combination of two things. And the first thing is, okay, I'm down X dollars and I need to go and make it up. I'm going to go and put the monster trade on. I'm going to put that mega trade on so I can make all my pips back. And instead of, if I'm only supposed to go and, trade, one lot, well, what I'm going to do is, so I can make all those pips up, I'm going to go and trade 5 lots. And if I trade 5 lots and let's say I'm down 20 pips for the day, well, based on my normal way of doing it, I only got to have this go 4 pips in my direction. Yeah, and then what happens is it goes 4 pips in the other direction, and now you don't have an account left, And that's generally how people go and blow accounts up. And then the second part of the way people blow accounts up is, well, this method isn't working today, and so, well, maybe it doesn't, because there are days when the Walmal method is just not a profitable thing. You know what? If that's the case, get up and walk away. But instead what people do is they'll either do one of two things at that point. One, they'll just continue trading it, okay? And that particular day, it may wipe them out. Just because it's just, you've seen the signs, I say it all the time. I know how the pound dollar breathes. I know everything what it's doing, and I know if it's normal or if it's not normal. Well, if you know it's not breathing normal, walk away, take a small loss, and just say, you know what, I risked $1,000 today. I risked $100 today, whatever it may be, whatever your account size allows you to go and do. And you say, I'm just going to go and walk away from it at that point in time and come back tomorrow, and that's an okay thing to do. That's a good thing to do, because what you're doing is you're ensuring that you can play again tomorrow. And then the second way that people go and blow things up, well, that method's not working today, I'm jumping over to this method, and then that's not working, I'm going to jump over to that method, and then in the course of a 2-week span or a month's time, they've now gone and tried 4 or 5 different methods, and they're not getting any traction because they haven't spent enough time to go and really learn when the method actually works and when it doesn't work. Now, some people might say, well, you go and trade, multiple methods. And I said, yep, I do. But I think the difference, though, is, and I'm not trying to pat myself on the back, so please, people, don't get that. It's more of, I've put years into this, and I've perfected a method, and I stay with that method, and then I'll go and look for other things and look for other methods. So when the market is not doing what it normally does, I've got another way to go and make money. But I never go and move on to another method until I've got the first one perfected, or I say that's just not going to work for me, and I move on. Okay, and that's okay to do that. But I'm also, when I'm doing that, I'm only trading pennies. I'm not going and trading dimes, dollars, tens of dollars. I'm only trading pennies until I go and figure it out. I'm not going to go. Let's say my account size, like you just said, is $1,000. And I'm trying a new method. I'm not going to try that new method, risking, a full lot. That's just craziness. Go and risk. Yeah, I want you to have money in the game, because then it makes it real. Risk a penny, risk a dime. That way you don't blow accounts up. And then you can, once you figure out that it's going to work for you or not, then you move on.
Well, no, I was going to say, what you would do is you would risk $1 at, a dime a pip.
Right, exactly.
Yeah.
That's exactly right.
Yeah, and so, like, right now, for the boys and girls and non-binary traders following along, if you had gone long at the double low, 39, you would have stopped out either at 5 or 10. Now,
Right.
people go, well, see, it doesn't work. Well, the other thing about that trade is, if you look at the chart, you would have wanted a fourth green candle in a row right there, because we already had 3. Now, if you look back, yeah, I can see 2 other times when there was 4 green candles in a row. But it's like, you're pressing your luck, because price had already moved so many pips off of the that little down move. So how much further up do you think it's going to go?
Yeah, and you also remember, the Walmal method is not really meant to be used at the last part of the hour.
Right.
So you know, and look what it did. It did, you know, if you would have taken that double O trade earlier in the hour when it was a legitimate trade to take, you could have gotten 10 or 11 pips off of it. It would have been a very nice trade. Then it ran all the way against you. Well, you know what? That's just not the way to go and trade that. It doesn't make sense to take that trade. And that's part of, again, spending time and having seat time, because, you know, you can't write a rule for every single thing. Some of it is just innate, you know, that you just say, oh, that's just not time to pray, you know, type of thing. But a lot of times I'll look at it and and I know I've done this to you on the phone. I said, you say you're going to take this trade, and I said no, and then you'll say why, and I said, then I have to pause for a second or two and figure out why I'm not taking the trade, and it's like, oh, that's why I'm not taking the trade, because it just becomes second nature for you to do that.
Yeah. Yeah, so right now we're coming up to the top of the hour here. So and it looks like the Walmal lines are going to stay the same. So we can watch this trade for about 3 minutes before the video ends.
Yeah, and the thing is here, you know, in this area, you know, to be honest with you, I don't know if I'm necessarily looking for a long here. It's just, you know, it's gone rejected off that 90, you know, and even before it went and did run through that 90 and got up to the 10 or 11, wherever it got to, you know, even look back in the middle part of that hour. Look at all those 1 minute candles where it just bounce off that double zero. It just had a lot of trouble at that line. So if I'm going to go and take a break above that double O, I'm looking to steal a pip. That's all I'm looking for. Unless, you know, and what I mean by that is, okay, as soon as it's a pip up, my finger's on the close button just to take that one pip. And if it's still moving in my direction, sure, I'll go and stay in the trade. But the moment that thing stopped, I'm out. I'm taking my money and putting it into my pocket. Now, some people say, well, you can't make money on that because it's spread and commission. Well, perhaps you're just not on a broker that gives you better numbers, and you need to do some research there, you know. And by the way, don't ask me for brokers, because I don't give recommendations on brokers. And I don't think you do either, TRO. But it's just, but you know, knowing that there are brokers out there that will give you much better spreads and much better, you know, and much better commissions. So knowing that, and if you know that that's the type of trading you're going to do, then that's what you can do. If you're looking to go and say, I'm always going to be looking to get 10, 15, 20 pips on every trade, because that's just what your method is, then, you know, spreads and commissions they really don't matter. But here, because of the way I trade a lot of times, it does matter to me.
Exactly. So right now we're kind of stuck halfway between the double O and the 90. So we'll just have to wait and see which way price goes. But there again, you see we had 4 green candles in a row, and now we have a red one. So that buzzard reversal's pretty much, you know, holding true. Looks like we're coming down to touch that 90 again. Let's see if it cracks.
It's coming, but it's holding here. Here we go.
And we're right near the daily, previous day's open.
A new 1 minute candle. We'll see what it does. You know, that's the thing. You just got to be willing to say, just see what it does. You know, just watch it. And, you know, and if you're not over risked and over leveraged, it really shouldn't be all that. Yeah, almost touch it. Didn't quite touch it on my chart.
We're right at it, right there.
There we go. Busted through, you know, and we'll see what it does now. Now, the next level to go and look at, it'd be a little bit concerned at, would be like at about 85, because that's the previous hour's low.
I've got 84 on my chart, yeah. But if you look left, you can see there's some little congestion right here. So it'd be like, take that pip.
Yep.
And you know what? The fastest 15 minutes in trading is up. So, boys and girls and non-binary traders, I hope that helps you with some purity, and so you can keep it simple and just figure out what you need to do to be profitable, because it's not what you trade, it's how you trade it. So go out there and drain the banks. And if you're new here, click subscribe, and please click like so more people can see this video. This is TheRumpledOne, over and out.